it's quite interesting to note the fact that market sentiments could be measured. You could measure sentiments exhibited by investors, market participants. So this video, I want to talk about how to measure market sentiments, like using investor sentiments or investor surveys to, and reports to gauge a market trend. So these sentiments and investor sentiments are measurable. You could measure sentiments. It's a measurable parameter. So market sentiment reflects the mood of investors, and it can be measured using several tools. So how do you measure sentiments? Number one is what is called Consumer Confidence Index. Consumer Confidence Index is a very important way of measuring consumer sentiments. So these measures consumer optimism without about the economy. How optimistic are consumers about the economy? This tool can measure it. So high confidence suggests positive sentiments, while low confidence signals negative sentiments. So your consumer index, consumer confidence index is a very important tool. It measures, consumer optimism or even pessimism, about the overall economy. Number two is investor sentiment survey. Investor sentiment survey. Number one deals with consumers of goods and services in general, but the second one here, investor sentiment survey, deals with real actual market participants. Deals with investors in the surveys like the AAII. It's a body that incorporates the members of this body are market participants. They are investors. I think it's American Association of Individual Investors or something of that nature. So this sentiment surveys tracks whether investors are bullish or bearish. So extreme readings can signal potential market reversals. It's a kind of survey. They undertake this survey to track or to determine, whether investors are bullish or whether they are bearish. And the outcomes, usually in extremes, will determine the next behavior in the market, how the market would then react. Number three is a volatility index, the VIX volatility index. The VIX, also known as a fear gauge, that name is interesting. It's fear gauge. It measures expected market volatility, expected how the market will be volatile in the future. So a high VIX indicates fear and negative sentiments, while a low VIX suggests confidence. In the case of confidence, the market will behave very well. It will signal, an increase in stock price. In the case of fear and negative sentiment, it could drive the market down, could drive stock prices down. Number four is put-call ratio. Put-call ratio. These are put or call. They are used as hedges. You could use it to hedge, your portfolio. Although we don't really have them in the Nigerian stock market. Our market isn't as advanced as that. Maybe in the future we could incorporate, put options and call options. So this measures the number of put options versus call options. A higher ratio indicates bearish sentiments, while a lower ratio suggests bullish sentiment. By the time you divide, put options all over call options, the ratio you have, if it's a bigger figure, a higher figure, it indicates, a bearish movement. If it is a lower ratio or a lower figure, it indicates or suggests a bullish sentiment. Number five, Economic reports and news sentiment analysis. Economic reports and news sentiment analysis. So economic data, such as growth in gross domestic products, unemployment rates, and these factors can affect sentiments. Positive news will boost sentiments, while negative news will then lead to pessimism, lead to panic. So these are things we should take into consideration. Number 6 is market breadth indicators. These indicators track the number of advancing versus declining stocks. Usually in a typical day in the market, you have transactions in virtually all the liquid stocks there. So you could measure, or you could determine how many stocks went up and how many of them went down. So there's that advancing versus declining stocks. So a broad advance suggests positive sentiments, while a widespread decline with them is a telltale sign of bearish sentiments. When you have more number of stocks going down than the number of stocks going up, that's a bearish sentiment. When you have more number of stocks going up than the number of stocks going down, that's a bullish sentiment. So you determine it through what is called the market breadth indicators. Number 7 is financial news sentiments. So news platforms, analyze headlines on social media to gauge market sentiments. Positive news leads to buying, while negative news will trigger selling. Sometimes, these things may not really correspond with the actual fundamental, but just news. Sometimes rumors can affect how investors behave, unfortunately. So in conclusion, measuring market sentiments through investor surveys and reports provides valuable insight into the collective mood of the market. By tracking indicators like the VIX, sentiment surveys, and economic reports, investors can assess whether the market is overly optimistic or pessimistic. You could determine this level of this stage of the market just by merely carrying out, sentiment analysis, and it helps them make more informed investment decisions. So monitoring these tools allows for better anticipation of market trends and potential price movement. So it's important actually to be conversant with these sentiments and how they impact the market, because you might end up using them one way or the other in the future as an investor. You don't just neglect them completely. You see how you can harness the knowledge about sentiments to apply into your investment decision making process.